Hello Forex traders, it's me here. You're welcome to Careers Trading Institute. If you're a new viewer on this channel, kindly click on the subscription button and don't forget hit the notification bell so you stay updated on every video I post on this channel. So guys, today I want to show you my bias on the dollar index and foreign currencies. What are my anticipations on the dollar and foreign currencies? So we are quickly going to go to the weekly time frame. Remember, I've always been emphasizing that the weekly time frames are the liquidity drivers. That's where the institutions position themselves. So we want to try as much as possible to trade in the direction of the higher time frames so that we can trade with the institutions. Okay, the higher time frames are the liquidity drivers. So let's go to the weekly time frame and see what's happening on the weekly. And so on the weekly time frame, we have been seeing a consistent willingness of the weekly candles to take out previous weekly lows. That tells us that we have a bearish order flow. But in the last week or the previous week, we see price action takes out liquidity below an old low, which is sell side liquidity, price straight into it, and we see a sharp rejection to the upside. This may be the beginning of a retracement move to the upside or a reversal, especially because liquidity has been taken on the sell side. Okay, and then we see this week's price action trading down immediately after price open. From the weekly candle open, price started going down. This looks like a manipulation to me. This looks like a repricing into an institutional reference point on the lower time frames, and we are going to go down to see it. Okay, look at the weekly open. Immediately price open, it started going down. This is really unusual, because if we are going to have a bearish week, we need to see price gives us a manipulation to the upside, and then price should start going down. So let's go to the daily time frame and see what's happening on the daily. The daily time frame, price took out liquidity below an old low, which is sell side liquidity, and then price expands to the upside, leaving us with a bullish order block and a fair value gap. This is a very powerful institutional reference point. And then this week, from the candle open, price started going down. And why is price going down? Price is actually trading into that order block and fair value gap. So that was why I outlined these institutional reference points, the order block and the fair value gap. Once I see a bullish breaking market structure on the 1 hour or 15 minutes, I'm going to go long on the dollar and then go short on foreign currencies. So we are going to go down to the 1 hour and see what is happening on the 1 hour. Now on the 1 hour, you can see that red line is the candle opening, the weekly candle open, price open and started going down. And what that means is that we have a buy side liquidity, a pool of buy side liquidity residing above these relative equal highs. And so from the candle open, price started going down. This is the Asian session box. You can see price is below that Asian session box, and currently price has traded into that daily bullish order block and the fair value gap. Okay, I would like to see a rejection to the upside. I would like to see a breaking market structure on the 1 hour or on the 15 minutes, and then I go long on the dollar and go short on foreign currencies. Where am I expecting price to trade into? I'm expecting price to rebalance the previous sell side imbalance and the buy side inefficiencies of the daily and weekly time frame. And as you can see, that this is a pool of liquidity residing above previous old highs. This old high, this is another one, and this is another one. And when you have 3 consecutive highs in this manner, I said it is called diagonal liquidity or low resistance liquidity run. So I like to see price actually trade into them in the long term. But for day trading, you may want to take profit above these relative equal highs. That would be done for the day. And remember, we're in December, and usually in December there is less liquidity in the market, so you are not going to see the volatility you desire in December. So take off something from every trade you take partials, or take off 30, 40 and 50 pips and be content with what you are getting in this season of the year. We are in the last month of the year, and institutions are taking off profit so they can cap up every trade they have made during the year. So let's quickly look at the Gbpusd and see what is happening on that pair. So this is the Gbpusd, and as usual also we are going to go to the weekly time frame to see what's happening on the weekly time frame. So you can see on the weekly time frame, price actually traded into an institutional order flow entry drill, or you can say that price tapped into a sell side imbalance and a buy side inefficiency, and then price rejected to the downside. Okay, it gave us a down close candle last week. Now this week price has opened and then started going above the candle opening price. This is the opening price, and then immediately price opening started going up. This looks like a repricing into an institutional reference point. Let's check the daily time frame and the hourly time frame. Why do I strongly believe that the foreign currency should go lower, especially Gbpusd, because it's the only pair I trade? It's because I see a lot of sell side imbalances that needs to be rebalanced on Gbpusd. This is a volume imbalance that has not been traded into. This is liquidity void, and this is a buy side imbalance and a sell side inefficiency. You see that all of these are high confluences that we need to see rebalancing to the downside, and also because seasonal tendency in this season says that we need to see bearishness on foreign currencies and bullishness on the dollar to cap up the year. So let's go to the daily time frame and see what is happening. On the daily time frame, look at what's happening. Price has actually tapped into a sell side imbalance and a buy side inefficiency. This fair value gap, look at this, price traded into this fair value gap. Now because this fair value gap is large, I would like to outline 50% of this fair value gap. It is called consequent encroachment. What that means is that we need to see price mitigate at least 50% of this fair value gap, because the fair value gap is a large range fair value gap. This is one way also to use fair value gaps. When they are large, mark up 50% of that fair value gap. Just like when another block is actually a large candle, I told you mark out 50% of that other block. It is called order block mean threshold. So currently price has traded into that fair value gap. Let's go to the hourly time frame. On the 1 hour time frame, you can see that price currently has taken out liquidity, has swept liquidity above that relative equal high, which is buy side liquidity residing above it. Now this looks like a stop hunt. Okay, price has taken out liquidity above here, and this is the Asian range between 2 a.m. to 6 a.m. GMT +1. Price is currently above the Asian session, and today is Monday. When you put confluences of the Asian session, the weekly market profile, we may likely see the high of the day formed between Monday and Tuesday, so that we can see a bearish repricing throughout the week. So guys, I want you to pay attention. You may not take a trade today, just study price action today and see what is happening. I really want to see price really trade into at least this breaker block of the hourly time frame. I want to see price find resistance at this old low, or you can call it the breaker block of the 1 hour time frame. Remember, I taught you about breakers. You see a high and then price forms a higher high and then breaks that low. This is a breaker block. All of this other block that was broken to the opposite direction, that is a breaker block. So once price trades into it, price may never trade into this because it is currently in that sell side imbalance and a buy side inefficiency of the daily time frame. So what am I looking for? I'm looking to see a shift or break in market structure on the hourly time frame and a break in market structure on the 15 minutes time frame. Once I see this on Gbpusd and I see that happening on the dollar index, I'll go long on the dollar and go short on Gbpusd. So guys, these are my expectations on Gbpusd and the dollar index. You can use this same knowledge of the dollar index to analyze your favorite pair, Euro USD and ZD USD. Remember, these things have a key intermarket relationship. When the dollar is bullish, foreign currencies are expected to go bearish, including Euro USD, NZD USD, AUD USD, and etc. So guys, if you like what I'm doing, I would like you to like this video, share and subscribe to this channel. And until next time, I wish you good luck.